Investors who are looking for a reliable source of income often look to dividend kings, which are companies that have increased their dividend payments to shareholders for at least 50 consecutive years. These companies tend to be well-established, mature businesses with stable earnings, which typically make them less volatile than other types of stocks. But as of late, there are two dividend kings whose share prices have been diving deeper than Rick Winters, and in this video, we're going to be talking all about them and why I'm buying more shares for my portfolio right now. But before we get to that, in case you're new to the channel, my name is Ryan Williams, and here we strictly talk about dividend stocks and how you can invest in them to create passive income and reach financial freedom. So if you love dividend stocks and if you're on a mission to retire early, then hit that subscribe button. I'd love to stay in touch as we both continue to grow our portfolios and collect that cash flow. Also, let me know in the comments, which dividend kings do you have in your portfolio? I'd be curious to hear if we have any of the same ones. All right, guys, now moving on, the first dividend king that I'm buying more shares of in my portfolio right now is Johnson & Johnson, who has seen a pretty dramatic drop in share price this month. And from what I've read, the catalyst behind this big drop is the current talcum powder lawsuit they're going through, where people are basically saying that using this powder gave them cancer. And they're also saying that Johnson & Johnson knew this could happen, but didn't tell people. Obviously not a good situation. And more specifically, this recent drop was caused by an appeals court blocking an attempt by J&J to transfer all of its talcum powder liabilities into a new subsidiary, which they could then bankrupt in a move known as the Texas two-step. But anyway, this news leaves Johnson & Johnson with a 6.5% share price loss in the last 30 days and brings them to a year-to-date loss so far of about 9%, which leads me to why I'm buying more shares right now. Taking a look at my dividend portfolio tracking spreadsheet, which you can start using for free. There is a link to it in the description of this video. I hope you check it out. But looking here at my Johnson & Johnson position, where I have nearly 18 shares at an average cost of $165 per share, we can see that the current share price is lower than my average cost. So right now I have a good opportunity to average down in this position. And scrolling over just a little bit, guys, looking at my market returns so far, I'm seeing a near 2% loss in share price. And even though I'm only down just a hair with my J&J position, this is still an opportunity I want to take advantage of, because it's not too often that we're able to buy these very popular dividend kings like Johnson & Johnson at a discount, which makes sense, guys. Oftentimes you're going to have to pay up a little bit for these high quality companies. So if I have an opportunity to lower my average cost per share, even if it's just a little bit, I'm going to take advantage of it because it puts me in a better position with these holdings that I plan to keep forever. Now, on the topic of high quality, if we take a look at Seeking Alpha's dividend grades for Johnson & Johnson, they're rating it pretty high. They've got a B for safety, an A+ for growth, a B+ for yield, and an A+ for consistency. Those are all really good grades. And getting into their actual dividend stats, we see the forward yield is nothing too crazy, 2.8%, with a decently low payout ratio, about 44%. So there's definitely room to continue growing this dividend, which they have for 60 straight years, guys. Like we mentioned earlier, Johnson & Johnson is a dividend king, and it looks like just in the last 5 years, they've been growing this dividend at a rate of about 6% per year. Not too shabby. Now, as far as my plan for Johnson & Johnson, I'm essentially just going to keep buying shares of this stock while it's at or below my average cost per share. As long as it's hovering within this range, I want to be picking up some more shares of this bad boy. And as it currently stands in my portfolio right now, it makes up about 6.5% of my portfolio's total weighting. And if we scroll down and see where it's at by income, Johnson & Johnson's only about 4% of my portfolio's total dividend income. But anyway, scrolling back up, I would not mind making Johnson & Johnson about 8 to 9% of my total portfolio, kind of like where Procter & Gamble and Starbucks is for me right now, because over a long period of time, I think Johnson & Johnson will continue to grow steadily in share price as it has historically done. Taking a deeper look at their share price performance across the last 10 years, this has steadily gone up over time, and in this time period, they're up over 112%. And zooming out across a longer period of time, going all the way back to 1993, which is the year I was born, this company has seen nothing but steady growth across time, guys. And in this time period, they're up over 1,500%. Oh my goodness. So that's my plan with Johnson & Johnson. Just keep buying while I can lower my average cost per share. And I've started here with a couple of recent purchases from both this week and last week. And then for this next dividend king, which I'm especially excited about, I will be doing the same. And this next one is Procter & Gamble, who interestingly enough started dropping back in mid-January, right around the time they put out their most recent quarterly earnings, which actually brought positive news. Their earnings were right in line with the estimates, and they beat on revenue while raising their outlook for the year. But still, nonetheless, guys, this stock has come down in share price, and in the last month, they are down nearly 7%, which leaves them with a year-to-date loss so far of 7.7%. And until today, actually, I was down in my Procter & Gamble position. As you can see, I have just over 26 shares of Procter & Gamble at an average cost of just under $139 per share. And right now, the current share price is just under $140 per share. So with this guy scrolling over, it looks like I'm up 0.77% with my Procter & Gamble position. And although I'm not currently in the red on this position anymore, I'm still happy to pick up some shares right around my average cost. Now, in regards to how Procter & Gamble is weighted in my portfolio, it's currently the second largest position, making up 8.3% of my total portfolio. And over the last couple of months, I've been adding fairly consistently to this position, as we can see here. These are all of my recent tranches, so I've definitely built this up a bit since December. And right now, this position is bringing in almost $100 of dividend income per year, and I'm just a few shares away from hitting that milestone with this Dividend King, so I'm determined to get there. Now, moving on to the dividend stats, guys, this is going to look real similar to what we saw with Johnson & Johnson. Procter & Gamble has a mid 2% dividend yield. Okay, they've got a mid to high single-digit 5-year growth rate, but Procter & Gamble has the advantage in the dividend growth history department, where they've been growing this bad boy for the last 66 straight years, and according to their investor fact sheet, have been paying this dividend for over 130 years, which is insane. And beyond the dividend, there's a lot more to love about the company as well. If we take a look at this new stock analyzer tool that I've been working on, it's going to show us a snapshot of some of Procter & Gamble's important financial metrics like revenue, free cash flow, dividend growth, shares outstanding, and we can even use it to calculate an intrinsic value for us using a couple different valuation methods, which we'll go through. And just so you guys know, I wanted to show this for Johnson & Johnson too, but the spreadsheet was giving me some errors. It's still a work in progress, so we'll have to revisit that in another video. But getting back to Procter & Gamble and taking a look at some of the highlights here, for the most part, the revenue is growing pretty consistently. I mean, it looks like 2013 to 2015 were kind of rough, but since 2016, they've been growing this revenue and spent on the up and up. Earnings per share is looking a little spotty. 2015 to 2019 was all over the place, but since 2019, it's definitely gone back up. And even with these hiccups here, across the last 10 years, this earnings per share is trending upward. Free cash flow, we're seeing very consistent growth across the last 10 years. I mean, there's a couple years right here where it goes down, but for the most part, this is trending up and to the right. And we already know this is going to be true with the dividends as well, because they are a Dividend King with 66 years of growth. This probably is not accurate right here. And it's good to see too that Procter & Gamble has been buying back shares consistently across the last 10 years. It's not a super aggressive slope downward, but they are buying back shares. Now, moving on and getting into the intrinsic value calculations, we're going to do it a couple different ways. The first way is going to be using a discounted cash flow calculation, which is a way to calculate how much a business is worth today based on how much money we anticipate it will make in the future. And on the calculator, this number right here tells us that across the last 10 years, all of these here, Procter & Gamble has grown their free cash flow by an average rate of about 4.8%. Now, it looks like this number otherwise would be higher if it weren't for 2017, where they were down nearly 23% free cash flow, and 2022, where they dropped nearly 13%. And so in our calculation, we're going to account for a 5% growth in free cash flow moving forward, and we're going to allow ourselves an 8% margin of safety right here. And by doing that, it gives us an intrinsic value for Procter & Gamble of $115.12, which is about 21.6% lower than their current share price of near $140. So it's still a little bit overvalued compared to this. And moving on, this next valuation method we're going to use is a multiple valuations model, which is another type of valuation calculation that compares a company to some others to try and estimate how much it might be worth. Basically, we're comparing the PE ratios of similar companies to Procter & Gamble. So in this example, Kimberly-Clark, Church & Dwight, and Colgate-Palmolive. And by taking the average PE ratio of these three companies, which is 35.6, and multiplying it by Procter & Gamble's recent earnings per share, it gives us an intrinsic value for Procter & Gamble of $213.76, which is a lot higher than the intrinsic value we got from the discounted cash flow calculation. And this would also mean that Procter & Gamble is currently 34.5% undervalued compared to its current share price. And when we average these out and apply 20% margin of safety just to account for any errors in our calculation, that gives us an overall intrinsic value for Procter & Gamble of $131.55, which means it's still about 6% overvalued. However, you can tweak these numbers a little bit, and if you decide, Procter & Gamble is a pretty stable company, it's pretty safe, I might not need such a big margin of safety, so I could get by with probably 15%. And furthermore, you could even reduce this margin of safety even more, say 10%, and then you get an intrinsic value that shows Procter & Gamble is actually undervalued. And also, you're going to want to take this with a grain of salt because I'm pretty novice at doing these intrinsic value calculations. It's something that I still need some more practice with. But nonetheless, I'm going to keep buying these two Dividend Kings, Johnson & Johnson and Procter & Gamble, while I have the opportunity to buy them right around my average cost per share. They may not have the highest dividend yields, but the cash flow from these two is about as reliable as it gets. And that's exactly why I'm excited to buy more and bolster my portfolio with these sleep well at night Dividend Kings. And I'll tell you what, these aren't the only stocks that have really come down in share price. In this next video right over here, I'm telling you about 3 more deeply discounted stocks that look like great buys right now in February. So click right over here to check them out, and I'll see you in the next one.